The process of buying and selling worldwide. Chapter 1. The Guide of World Trade. Get free stuff, free samples, from overseas. Present yourself as a company with professional stationery. Find the names of foreign companies by typing the relevant keywords into search engines or going to company list websites. Get the standard periodical directory at the library and go to the International Trade section. Get Ulrich's periodical directory and you'll find several useful sections in the business and economics section. The best book I've found on the subject is the World Business Desk Reference written by Alice Gelds. She gives about 8 to 12 good references for every country of offices that are there to help business trade people. I found it at hashtag 651.7 of my library. There's also the World Trade Resources Guide by Gale Press, 800-877-GALE. Check out the sections number 381, hashtag 382.4 and 658.84. You can get the addresses of embassies, tourist boards, and chambers of commerces from the Worldwide Chamber of Commerce directory at the library. Send foreign companies letters stating that you're potentially interested in distributing their products in your country. Ask for a catalog. When you get the catalog, look it over, pick a few products, then ask for demos/samples. Some will send you some for free, others won't. How do you actually do business elsewhere? There are a variety of business arrangements used in world trade, the approach you use dependent on the situation and the product you are selling. Although it's understood that you will have to make changes to your product to sell it overseas, the most common method of world trade is to create your product at home on your home turf, adapt the product to meet your target country's standards and requirements, then send it over to the customers through retail stores or set up a mail order/internet sales department and ship directly to foreign customers. Go through local marketing agents in foreign countries. This is the most common method since these people are insiders, know what's going on in the area you want to trade, and for the fee you pay them, the honest ones are worth it. A commissioned agent is an individual or company who acts as a sales rep in a foreign country or region, getting a percentage commission of everything he sells for you. Some products can be sold through local distributors who are basically wholesalers in foreign countries who buy directly from you then sell to retailers. As an incentive, the company might give the local distributor exclusive rights to sell the products in a territory for a specific time period. Be wary when dealing with sales agents and middlemen. The good ones will set up a solid customer service infrastructure for your products. The bad ones will sell your products then leave your customers hanging when they need parts, repairs, knowledge, etc. There are large companies that are international distributors whose specialty is to broker certain types of products worldwide. If you can make a deal with one of these companies, everything is taken care of. You deliver them your product, get your paycheck, and that's it. You don't have to deal with world trade hassles beyond that. Setting up a branch office in a foreign country is like a branch office anywhere except that it's in a foreign country, probably staffed by a mix of foreigners and company reps from the home country. Just follow the rules of the country you're in. Before you can open a branch office in some countries, you need a sponsor from that country, an honorable citizen on your payroll. A branch office will, in all likelihood, be staffed by a mix of your people from your home country and foreign locals who will be your sales reps and agents. It can be as small or as big as you want, a small office that deals with paperwork only or a big warehouse that distributes your product throughout the country. Another method of sales is the contractor or subcontractor arrangement. This applies if there is some labor involved. Let's say you sell air conditioning units. Company X in Thailand offers to buy X number of units from you, then sells them as Company X units to the public while a few of your guys go over, install and service them. In some situations, you get existing foreign companies to become your authorized dealers and sell your products or contract out your services for you through their business operations. Get good, reputable companies to do this for you as opposed to shoddy, low-quality ones who will tarnish your name. A joint venture company is different from a branch office in that two separate companies get together even if the main company who exports the product funds this offshoot company in another country, but for all intents and purposes, they are separate companies working together to sell the product. Joint ventures between an American or Canadian company and a foreign company are relatively common. Usually an extensive contract is made up with such details as the percentage of ownership, job responsibilities, and the exact nature of the business/project. Joint ventures are good in the sense that each side helps each other, but could get bad if there's a falling out or one side wants to intimidate the other to get more out of the deal, which can be easy to do since there is usually a dominant side in any business deal. One problem with joint ventures is that the foreign owner tries to get rid of the outside investor illegally through intimidation tactics, which happened in a hotel in Moscow when the Russian owners simply told the Canadian partners to get lost, whereupon the Canadian partners went to the Canadian government, who went to the Russian government, and some kind of mediation hearing was set up. Be wary about who you partner up with. In China, there is a law that says at the end of the joint venture project, all assets of the joint venture company go to the Chinese partner. The best joint venture is to put a guy in there who's really a part of the main company but acts independent for legal reasons. An advantage of doing business this way is that the foreign partner is perceived as a local company as opposed to a foreign, imperialistic corporation, which gives it breaks, among them more acceptance by the locals and easier access to government contracts. Within the realm of joint venture companies, from a legal standpoint, are equity joint ventures and cooperative/contractual joint ventures, which are beyond the scope of this book, but if you get close to being in such a situation, you can learn about it then, particular to the country you're dealing with. A consolidator is a company in your home country that buys a bunch of stuff from a bunch of companies in the home country in one specific area of products, for example, drugstore products. They assemble all this stuff in a big warehouse, then sell it to companies in other countries who will resell it. They are wholesalers for foreign retailers. Strategic partnerships are deals with foreign companies where you either sell their products or provide an entryway for them into your country, and they do the same for you in their country. Foreign governments buy a lot of products elsewhere simply because they can't get the products they need from their own country, simply because they don't have the infrastructure or the particular raw materials. Go to government procurement office websites and look around. Incidentally, the American government is the world's largest purchaser of products in general and purchases products from foreign countries if the price is right and it's a scarce product. I have sections on this for Canada and the United States in my business book. Sell to large companies, either intermediate parts, the means of production, or products ready for sale which they will resell to wholesalers and retailers. With big contracts, you often deal directly with them, not a middleman. Sell through trade shows. Get contacts from your national trade office and the trade offices of foreign embassies. Required trade documents. You need proper documentation in order for the goods to move smoothly from border to border. Some of these are government documents which enforce trade laws, and some are documents originated by the purchaser and the seller, including a letter of credit, if applicable. Because the documentation process can be tedious, many world traders hire professional shippers or freight forwarders to do the job, because it can be a job in itself. You should list all the documents involved in the transaction in your export sales contract, stating which party is responsible for which documents. Some of the general documentation required is as follows. Business documents. Pro forma invoice, translated from Latin, it means invitation to buy. This is the invoice the seller makes up in response to the buyer's request, which the buyer signs when satisfied. Then it becomes the formal order form, aka a commercial invoice. The commercial invoice document, the main document of world trade, serves as the record of the sale between the seller and the buyer and includes the major details of the order. The commercial invoice can serve as the customs clearance document to the receiving country where the goods are exported to. Third-party inspection certificate. In some cases, the buyer has to hire somebody in the country where the goods originate to inspect them before they are shipped, because it's the law in some countries before they allow goods in. There are trade inspection companies around that specialize in this kind of work, inspecting goods and supplying the buyer and seller with an inspection certificate once they have done it. The packing slip provides information on how the shipment is packed. It is done primarily for the convenience of customs inspectors when examining the goods. An insurance document/insurance certificate is made by the insurance company. It is usually made out to the buyer and contains a description of the goods, their insured value and other general insurance information. Export sales contracts. Small, sporadic orders just require an order form and an invoice. Large, regular purchases usually involve an export sales contract which defines the business relationship on both sides, exactly what they do for each other along with conformity to the trade laws in both countries. An export sales contract simply gets all the terms down on paper such as the ordering method, shipping method, product specifications, time frames, payment terms, etc. The sales contract names the legal jurisdiction that governs the contract, which country, or maybe both countries. There are all kinds of different rules for the many different products and services that are traded as well as rules for different countries and regions which are all addressed in export sales contracts. When drafting up an extensive export sales contract, get a trade lawyer to help you out. Most trade contracts are in English and translated into another language in some circumstances. Make the contract as simple as possible while keeping its integrity in order to be complete. The tenets of a basic contract includes the following. Names of all parties involved, the buyer, the seller, and/or the seller's agent. Date the contract is signed. Certain conditions may be dependent on this. Description of the goods and/or services involved, including brand name, serial numbers, tariff numbers, etc. Product price, which currency the buyer will pay in. American is the most popular. Who pays the duty? Method of payment. Time frame, credit terms. If payment is by letter of credit, name the banks representing each party. Shipping method, shipping dates. Specify the measurement system used, either metric or foot-pound. Number of units/quantities involved. Terms and conditions relating to the specs of the goods and services, their quality, guarantees, etc. Terms of inspections, if applicable. Who pays for the inspection, s. Terms of the purchase, exactly what the buyer gets, who pays for shipping, service involved after purchase. Type of packing, any special provisions required for sensitive equipment. State conditions that may limit responsibilities like storms, labor strikes, war, terrorism, etc. Insurance coverage, type of insurance, who pays. Claims procedures, how do the buyer or seller file a claim if the transport company screws up somehow. Financial documents. The seller generally provides the buyer with a bill of exchange which is dependent on the financial arrangements they have made. The two major types of bills of exchange are a sight draft which requires that the buyer pays as soon as he receives the goods. A term draft which is payable in installments agreed to beforehand. Government documents. There are various types of government documents depending on the countries involved and what treaties they trade under. A certificate of origin is a document used to trade between the United States, Canada, and Mexico under the North American Free Trade Agreement/NAFTA, NAFTA Certificate of Origin, Form B-232E. Certain products are of a sensitive nature regarding military secrets, toxicity, safety, etc., so they may need a special permit. Some countries require an import license before the buyer can bring his goods in. You, as the seller, might have to go through his embassy to get this document for him. Most countries require health certificates to accompany such imports as live animals, animal products, plants, agricultural products, etc. Transportation documents. A bill of lading is the contract between a shipping company and the seller for the transport of goods to a specific location made up by the shipper. There are truck bills of lading, air bills of lading, airway bill, rail bills of lading and bills of lading for transport by sea. In the case of ocean bills of lading, once the shipment ships off, the buyer receives a bill of lading through air mail from the shipping company. When the goods arrive, the buyer presents the bill of lading to get his stuff. Chapter 2. Hire a middleman. Foreign agents/sales reps. Even if you sell direct to foreign buyers, if you have several buyers in any country, it is a good idea to hire a foreign guy, called an agent, who's a local in that area to manage your affairs there. Business is conducted a bit differently everywhere. A foreign agent simply makes good sense, to get a foreign local on your side for a fee to take care of business. Money is the greatest motivator. Hiring one of these guys could conceivably save you a lot of hassles in the long run. The language alone is a big barrier, translating, interpreting, not to mention laws, bureaucracy, customs, visas, connections, different business practices, terrorism threats, organized crime, etc. Pay the agent on commission to find wholesalers and resellers for your products or set him up as a retailer. A salary-only agent tends to be lazy. It's just human nature. A commission agent who gets a minimum base salary may be the best way to go. Commission percentages depend on the product you're selling. It may be a straight percentage or conditional on volume, such as 10% commission for up to $100,000 in sales, 15% commission for everything beyond that in a calendar year. Agents can help you with your local travel and accommodations when you actually go to the foreign country to look around. Hire as many agents as you need for your different types of products and different venues such as wholesale, government, military, retail, etc. If you have an agent you don't feel comfortable with, dump him, find a better one who's honest and interested in making honest money through hard work. In my opinion, the most standard kinds of agents are the ones who are probably foreign-born but emigrated to your home country and now act as agents for exporters in their former home country. The other standard ones are the people who live in the foreign country you're interested in, speak good English, probably have a business degree and want to work for foreign companies who want to make inroads into their country. There are companies out there that act as worldwide agents. You go to them, make a deal, then they try to sell your stuff worldwide. These types of companies usually specialize in one particular product area such as computers, medical or automotive equipment. There are also regional agents who work a number of countries in a region like Central Europe, Southeast Asia, Latin America, the Middle East, etc. Distributors and wholesalers aren't really agents. They run their own game. You sell your stuff to them and they take it to other countries to sell. If you can find a distributor, this is the easiest way to go. You won't have to deal with the hassles of world trade. If you authorize an independent dealer to distribute your products in a foreign country, be wary that he is representing you, so your reputation is tied in with the service he gives. The commissions you pay may seem high, but sales is the most important part of your business, and look at all foreign sales as a bonus. Don't just pick the first agent you come across. Interview them like you interview candidates for a job. Develop a list of contenders and whittle it down to the best one. Ask your government trade office for a list of possible agents that you can interview. Introduce yourself to them in a letter, ask them to send you information about what their company does and specializes in, do some research on your own, type their company name into search engines. Advertise in foreign trade journals that you are looking for sales reps. Set up a booth at both major North American and foreign trade shows to possibly meet agents/sales reps. I already said it, but I will say it again. Do not make a hasty decision on choosing an agent. The agent could be the difference between you making big money or going bust in a foreign country. Choose your agent, well. At the very least, have a face-to-face interview with several candidates before you choose one guy. You learn more by the intuitive feel face-to-face than any other way. Visit the offices of the agents you're interviewing. Tell them you want to get a feel for their operation. If they refuse you, then you know it's a no-go. Run a credit check on them. After you pick 1 or 2 agents, hammer out a contract with them which includes the products to be sold, the specific area or territory in which the agent will represent your products, agent's responsibilities, commission, and salary, if applicable, the term, time length, of the contract and possible reasons for termination of the contract. In the end, agents often have a number of clients that they're selling goods for, so don't expect undivided attention unless you're his main bread and butter. Call the agent every month or so to see how he's doing and remind him he's working for you if he gets lazy. Help your agent sell your product. Give him lots of marketing materials and demo products. Make the agent feel a part of your company by talking to him, sending him company info, etc. Try to befriend him. Visit him and his family if he offers. If he's good, invite him to the home country for a visit, all expenses paid. en.wikipedia.org/wiki/foreign_agent. encyclopedia.frlix.com/foreign+agent. fas.usda.gov/gain file/2002111/145784633.pdf. There are several factors to consider when hiring an agent. foreigntradeagency.com, mostly China trade. globalimporter.net. hcbennett.com/foreign_principal_agent.htm. legal-dictionary.thefreedictionary.com/foreign+agent. lihoy.com/34520/foreign_trade_agent.html. mercocertec.com. thefreedictionary.com/foreign+agent. tradenote.net. Trading houses/trading brokers. Trading houses are companies run by World Trade insiders who take on companies as clients, then go around the world looking for foreign buyers for their client companies' products. There are many different types of trading houses, each with their own specialty. Some specialize in countries or regions, others specialize in certain categories of products. It's a two-way street. There are foreigners looking for certain types of products, so they hire these trading houses to find companies who can supply them with it. Ask your government trade office for information about trading houses in your area, look for them in the phone book and type the following term into search engines. Trading houses plus, area you're interested in. dfate-maci.gc.ca/English. Look for the Canadian Government Department of Foreign Affairs and International Trade booklet entitled Export Markets, The Trading House Connection. fedworld.gov, American Info. globalsources.com, large trading house based in Hong Kong. tradinghouse.com, Trading House Business Exchange. trading-house.net. internationaltradinghouse.com. satc.co.za/tradinghouses.htm. caravantrade.com, a specialized trading house in bulk instant coffee. importexporthelp.com. importbureau.com. exporttradebroker's.com. biderbuy.co.za/static/help/tradebroker.html. Chapter 3. The Logistics of World Trade. Costs of doing business elsewhere. 1. Exporting costs money. That's a fact of life of the business. It's part of the cost of being in the business, but if it wasn't profitable, people wouldn't do it. Some of the major costs to get into the exporting business are as follows. The cost to get out there to other countries, meet people, make contacts, give them demos and promotional literature to market and promote your products. You will have to hire an export person or perhaps an entire staff on one side or both sides to ship, if applicable, manufacture, market and sell your products. You may need a trade consultant to show you the way the system works. Your export staff will have to travel to the target countries, stay at least a few days, meet people, dine with them, travel around while there, bring demo products and promotional literature, and that's just for starters. Then you will have to set up either an office, a receiving facility or a manufacturing plant, get government approval, possibly build an infrastructure, etc. Chances are you will meet with local or company agents or importers who are able to speak the English language, which is the business language of the world, but at some point, you will have to hire people who speak other languages for general tasks and provide product literature in foreign languages. Oftentimes products have to be redesigned for the foreign market. At the very least, the instructions and some letter markings will have to be changed. Some sizes will probably have to be changed if selling in Asia, because Asians are smaller than North Americans. Products should be packaged in a way the locals are familiar with. Don't assume the foreigners will bend for you. You have to bend to please them. Even the ways people do business is different in terms of suppliers, payment schedules, etc. You have to play by their rules. Expect additional, unexpected costs. Will your product have to be tested and approved for government rules and safety standards? Will you have to redesign the product to meet foreign standards? What about the electrical aspects of the product? Many parts of the world operate on a different system. 50hertz.com/pwchrt, worldwide currents. cropla.com/electric, world electric guide, also international dial codes. teleadapt.com, teleadaptusa.com, 877 teleadapt, info about electric power, internet service, telephone service, etc. in foreign countries. Is your product and its packaging politically correct? Do you unknowingly insult people in some way? What about units of measure? Most of the world is metric, the United States goes by the foot-pound system. Check on the labeling and packaging laws, especially if you're selling a food product in the United States. United States and Canada are the two most stringent countries around for food labeling. Some countries have several languages and laws about which language you must label your products with. When in Rome, do as the Romans do. Either you or your representatives must be aware of local customs and religions and honor them. While we think nothing of a girl in a bikini posing with a product, this is strictly taboo in some culture, like the culture of our friends, the Muslims. Most cultures are willing to adopt some Western ways, but some Muslims have no middle ground. It's their way or the highway. Costs of doing business elsewhere too. The most popular form of foreign business representation is the commissioned agent. Commissioned agents are salespeople who get paid a percentage of your product that they sell. This percentage has different conventions in different countries and for different products. Some high-volume products may have low commissions. Some hard-to-sell products might have high commissions. In some countries, you have to pay off government authorities, the utility company, and even the local organized crime ring in order to do business. This is how they supplement their incomes. It's the way it works. Pay up, leave, or bear the consequences. Letters of credit and insurance cost are other costs of doing business. The currency exchange rate could be a problem, especially in unstable countries where their currency is always changing. If you're a wholesale company, try to get payment in your national currency rather than theirs. The American dollar is the most common currency of world trade. Transportation costs depend on the product and the method of shipment. Perishable goods and products with a short shelf life travel by air. Most other things go by sea, but do your comparison shopping. When you factor in all the costs of both modes of delivery, air cargo might end up cheaper overall. In any case, deal with an experienced freight forwarder or shipping agency, at least at the beginning, until you can make your own way. Most governments charge importation costs for bringing your products into their country in the form of tariffs, customs charges, and even handling charges. Some trade agreements are phasing some of these trade duties out, but they're still there on various products in various countries. As a short review, the costs of doing business in world trade are as follows. Cost of research and travel into the new country to get to know it and make contacts. Adapt your product to the market. Redesign it if applicable, change the packaging and labeling. Hire a freight forwarder or shipper to get your product there as it's not being manufactured there. Hire agents, representatives, employees, etc. to sell your product on a commission basis. Hire service people for the product. Train them if necessary. Change the electrical current, if applicable. Pay local government fees and possible bribes to get things done. Shipping and payment insurance. Tariffs. Customs duties. Handling duties. Other costs of setting up, rent a building or buy one. Costs of doing business elsewhere. 3. Obviously, before you go charging off half-cocked to sell your widgets in Shangri-La or anywhere else, you do some research beforehand to see how stable the country is, what are the people like, do they have money and like to buy things, will they like your things, how easy or difficult will it be to set up shop and sell there, etc. What's the competition like? Is there any competition? What is the best area of the country for you to get started before you proceed onwards into it? All things considered, ultimately, will you make a profit for your efforts? After you do this and decide you will be able to make a profit, hire a local agent and or set up a branch office, then make up some promotional materials and demos suitable for that country and start advertising to wholesalers, brokers, consolidators, etc., people who will buy your product in bulk to either sell to retailers or to sell through their own retail outlets like a large department store. Get a booth at relevant foreign trade shows with an agent who speaks the language. Your own government, Canadian, American, British, etc., has programs, directories, and trade shows that highlight the products of your country. Get involved with whatever they offer. There are world trade websites that list products looking for foreign markets. Get listed on some of these websites. In addition, start a website detailing your products for the foreign market you're interested in. If you want to be a success anywhere, put in a customer service branch to deal with the customers after they buy your products. A pricing strategy is simple. You charge something above total costs in order to make a profit. If you're new there and unique, like, for example, potato chips, you have to price it low enough so that it's comparable to related local snack foods and such that people fork over the money to try it out. However, with some products, if you're the only one there, like a guy selling skateboards in Moscow, you can charge what you want and still sell them until you get competition. In any event, you have to regulate yourself with the local competition for equal or related products. In order to lessen the risk of world trade, do research on your countries for stability. Do research on your buyers for credit and corporate profiles. The foreign trade desk of your bank and your government trade office can help you with these matters. Try to make all transactions in a major currency like the American dollar, Canadian dollar, or the euro dollar to avoid possible inflation and fluctuations in other currencies, some of which swing wildly. Buy shipping insurance if you think you need it. You could buy insurance for your cargo, which includes theft or non-payment by the buyer. Giving credit to buyers. Payment schemes or collecting money from your foreign business associates who buy your product in some wholesale manner in order to broker or retail them depends on the character of the people you will be dealing with. If you start a branch office and deal with your own employees, they can monitor their business dealings with local merchants one by one and determine who's honorable and who isn't. The same rules apply as anywhere. You can give a bit of credit upfront, and if they pay that off promptly according to a monthly plan or whatever, you can give them more goods upfront. Some places don't use credit much. They give you cash for every widget you deliver right on the spot. This is a good way to go, but don't bet on it. More merchants are getting credit as the world marketplace standardizes to the same format of doing business. Just like anywhere, there are credit reporting agencies worldwide who keep tabs on individuals and companies. If you've got some big purchasers of your products who want credit, check their credit through one of the big three which have some manner of a worldwide service, Experian, TRW, TransUnion, and check a company rating database like DNB.com who rate companies on creditworthiness. Ask your government's trade office for advice in this matter. The zeitgeist of world trade in general is to give foreign buyers credit as opposed to demanding payment upfront. Exporters are now willing to wait longer for payment if it means more sales, so they are willing to make interim financing arrangements with their buyers. In order to make sales, you have to meet a buyer halfway. Don't give him the store based on his word only, but a lot of buyers are cash strapped. They have to make the money by selling products, so be willing to give them a bit of credit. There is risk there by extending credit to buyers you barely know, so use your common sense. You can at least do a credit check on both the individual and the company you're dealing with. If you're offering credit, ship him small quantities until he pays you a few times. One guy who had a problem went to the country's embassy in his home country, and they got the word back to put pressure on this shoddy buyer, and he paid up. So don't be above going to the guy's country's embassy and tell them they got a snot ass giving their country a bad name in world trade circles. Of course, you can do all your business this way, shipping directly to your few buyers, but if you have more than 5 buyers, it might be a good idea to set up a branch office with a company representative there doing all the deals with them. You ship the stuff to him, he puts it in his warehouse, then sells it from there. Just about everybody in world trade has a track record as a merchant or a manufacturer. Very few people or companies start in world trade right away. They start as little domestic operations, then build up to expand to world trade. There are plenty of people you can go to out there for advice on buyers and sellers, such as your government trade office, the foreign government trade office, freight forwarders, agents, bank officers that specialize in world trade, other exporters, business people in your field, etc. Get reputable contacts from them. Banks provide medium, up to 5 years, and long-term, up to 15 years, loans for world trade if they think the country is stable, the merchant is creditworthy, and they can make money off him. The bank might loan money to your buyer for a major project such as building a new store and forward the money to you to manage it and take your cut as you ship them product. Buyers in good standing who have the backing of one of their government agencies or their national bank can get a loan from banks in the United States and Canada. Factoring is a process whereby a bank, usually through an export finance house it owns, buys the buyer's promissory note to you and gives you immediate cash in exchange for collecting a bit more money from them later. The bank, called a factor, is the middleman who does a credit check on foreign companies who want this service, and if they think they can make money off them without much risk, they lend them the money up front. Export finance houses do a number of services including shipping. Try typing the term into search engines. The shipping process. Products take longer time to ship overseas than domestically, and the costs are higher. The customer is generally responsible for paying the shipping and insurance costs for international orders unless the business owner is offering a deal as an incentive to get worldwide orders and or has a wholesale deal with a worldwide parcel carrier like DHL, Emery, or UPS. You should have a set of instructions written out about how to pay for the order and a general guide on the costs of shipping. Ensure that you have a guaranteed method of payment with either a letter of credit popular with international business-to-business sales or credit card, cashier's check, and international money order in U.S. funds popular with small consumer orders. There is risk in international shipping. In my opinion, it's theft. In the United States and Canada, we have consumer organizations and government consumer agencies to help us with shifty-eyed mail order companies, shifty-eyed delivery companies, and fraudulent consumers. Once you leave these borders, all bets are off. There is also economic instability which leads to fluctuating currencies and political instability. You can find out about recent travel warnings at state.gov and avoid countries that you perceive to be unstable. You don't want to be in a position where you ship $10,000 worth of products to a country that just had a coup and became a dictatorship. When you establish prices, do so using your country's denomination and state it on your order form. Collecting from deadbeat customers is tough enough in your home country, but imagine collecting from a deadbeat in Thailand or Tahiti. The solution is to ask for all payment upfront for small consumer orders, but for bigger business-to-business orders, businesses who may want to buy either supplies from you or product for resale will naturally be just as leery of you as you are of them until they get to know you. So the solution is basically an escrow company, a reputable bank in their neck of the woods which they go to, which you can verify through Polk's directory of banks. They either have $10,000 or put $10,000 into an account there and write a check on it to be cashed upon the delivery of merchandise. They will probably ask the bank to email you saying they have $10,000 waiting for you once they receive the merchandise. This is the way it works because these are relatively large amounts of money, but once you get to know each other after several transactions, some trust will probably build up. Check the business section of your newspaper for the world's most common currency exchange rates. Laws in other countries protecting both foreign businesses and consumers might be lax, but they don't like to be embarrassed, and citizens in other countries are generally afraid of their governments. So if you ever have some kind of hassles with overseas selling or buying, it doesn't hurt to send off letters and emails to their embassy in your home country plus government offices in the country you're having business problems in. You can get information and leads on your target country both through the trade office of your country and through the trade office of the country you're dealing with. You can find assistance through your country's embassy in your target country or go to score.org for assistance. When you do a credit card transaction, perform a standard credit card verification, but in addition to that, fax or email the buyer an order form, get him or her to sign it and send it back, and make sure the name on the credit card is the same as the name they sign on the order form. My advice is not to offer any credit until after a number of transactions. The escrow method works best. There are con artists worldwide who will try to fast talk you by offering to send you the financial statements of their supposed prosperous company. Don't go for it. Tell them it's your terms or no terms. The forwarder gets the products ready for shipment and prepares the documentation, including the bill of lading. A bill of lading is a document used in shipping which is a list of all the products being shipped and contains information about the origin, destination, and shipping means. The freight forwarder sends you the paperwork. You send it to your bank to let them know that the shipment is on its way. A freight forwarder is a shipping company that ships goods worldwide and does all the paperwork required. You can find them in the yellow pages of the phone book. Try to find one who specializes in the countries you're shipping to, because then they know the ropes. Other freight forwarders can do it for you, but it's best to deal with a specialist who knows what's going on in one specific part of the world. UPS, Federal Express, Airborne, DHL and other major shipping companies do freight forwarding work. That's their business, to do both your paperwork and the shipping. You can tell several forwarders what you're shipping and where to and ask for estimates, then pick the best one. Your bank sends the documentation to your customer's bank, usually by airmail but more and more electronically, which sends it to your customer. Your customer uses this paperwork to claim the goods once they arrive. He tells his bank he got the stuff, they send the funds over to your bank and you get your money. This sounds like a simple procedure, and it often is, but there are also many times when there are complications. Usually the delivery date is later than expected, or the merchandise is lost or damaged. An irrevocable L/C means that the customer who issued it cannot change its terms, meaning he can't back out of the deal once he makes it. A confirmed L/C means that your bank will pay you when they get the paperwork as opposed to delivery. The customer's bank is extending him enough credit to cover the purchase. Another way to alleviate some of the risk on the seller's part with large orders is that the buyer will send a check or credit card advance of 20 to 50% of the order upfront before he receives it. Simply say you want 25% of the cost before you ever ship. With small consumer orders, you get 100% before you ship. Shrinkage is the term used to refer to breakage, loss, or theft of product during shipping. To accommodate for shrinkage, include the term approximately or about before the L/C amount, such that the customer can justifiably knock about 10% of the price if there are defects when he receives his order. Finally, there are several types of L/Cs. Talk to your bank to see what they got, then pick the type you like. In essence, get a website and say you sell to both consumers and businesses at wholesale prices worldwide. Include the wholesale prices for quantity sales. Outline the payment and shipping process for international sales. Use credit cards, cashier's checks, money orders in your home country's currency and letters of credit/LC to transact business. Use freight forwarders to handle your international sales. Carnet. A carnet is a customs document that gives business people the right to export goods temporarily to another country, usually for display and demonstration purposes, then re-export them back into their home country without paying duty or going through an extensive customs inspection. Because of NAFTA, Canada, the United States and Mexico don't need carnets between them. If you plan to bring demo products to other countries, you should apply for a carnet through your national chamber of commerce. Most major trading countries use carnets. Carnets are generally valid for 1 year and can be used for an unlimited number of trips. During that time, they cover a number of commercial products but generally not consumable or disposable products. With a carnet, you do not fill out customs forms or pay duties each time you enter a country with your products. You pay a fee for the document and that's pretty well it. The International Bureau of Chambers of Commerce in Paris developed the carnet system. International Chamber of Commerce. 38 Cours Albert 1 ER. Paris, France F75008. 1-4953-2828. Fax, 1-4953-2859. iccwbo.org. iccwbo.org/index_court.asp, ICC International Court of Arbitration. U.S. Council for International Business. 1212 Avenue of the Americas. NYC 10036. 800 Carnets. rock-itcargo.com/carnet_services.html. Chapter 4. How to pay for what you buy globally. Common payment methods. Some common payment methods are listed below, beginning with the safest going to the riskiest. Advance payment or cash advance. You receive payment before shipping the goods. This method is not a common practice, but when dealing with a first-time buyer, you have to check out him and his company's credit rating and still demand some money up front, at least until you make several transactions with each other. A letter of credit is kind of like an escrow deal that protects both sides, mediated by a financial institution. I cover this elsewhere. Foreign collection/bill of exchange/drafts are a deal where you, the seller, go to your bank and they make up some paperwork that they send to the seller's bank in the foreign country. Then, depending on the two of you, either he pays before you send the stuff, he pays when he sees the stuff somewhere in a storage area at the port, or he pays when he gets it. A sight draft, also called documents against payment, D/P, requires the buyer to pay before receiving the documentation. A term draft, also called documents against acceptance, D/A, requires the buyer to pay within a prescribed period of time like 30 days, 90 days, etc. When the buyer pays and the money is deposited into the seller's account, the buyer gets the paperwork to get his stuff. This system is not as safe as letters of credit because the banks don't guarantee the payment no matter what happens. Open accounts are popular in North America as the most common way of businesses doing business with each other. Your buyer places an order, you ship it along with the paperwork, giving him X number of days, usually 30, to either pay some of it off or all of it. You do this after you've gotten to know a buyer. Consignment works just like it does here. You give the buyer some product and wait until he sells it to make enough money to pay you off. Obviously this is risky unless you know the guy and can trust him. Letter of credit. A documentary letter of credit, L/C, is the most common form of international financial transaction for world trade. Your bank deals with your customer's bank, and through this intermediary method, both sides are safe. A letter of credit is a standard document issued by a bank to expedite the purchase of imported or exported goods. The bank acts as the escrow mediator between buyer and seller. Letters of credit are a guarantee of payment made by the buyer's bank at his or her request to guarantee payment to the exporter when he has fulfilled his part of the bargain. Basically, the buyer wants the paperwork saying the stuff has been sent and is on its way, then he authorizes his bank to release the money to the seller's bank, whereupon it goes into the seller's account. The buyer and seller agree on the terms of a deal, then make up an L/C contract. The buyer sets up the L/C at his bank. His bank forwards the letter of credit to the seller's bank, where the seller approves it, rejects it, or suggests changes that the two hash out. Once both sides are happy, the seller does his part by shipping the goods. The seller presents the letter of credit and other documentation to his bank. His bank sends the documents to the buyer's bank. If everything is in order, and they are satisfied that he has shipped the goods, the buyer's bank transfers the funds to the seller's bank and the money is put into the seller's bank account. An irrevocable letter of credit simply means that the LC cannot be changed without the consent of both the buyer and seller of the merchandise. Letters of credit only ensure that goods are shipped and delivered but make no warranty regarding the quality of the goods. This is between the buyer and seller directly, not the intermediaries. The only way to counteract this is to have you or a representative on the other side inspect the product before shipment, and if it doesn't meet your standards, don't accept it. There is insurance for defaulted letters of credit due to political strife, economic depression, etc., sold by chartered banks and available through some government programs. The following steps outline a standard irrevocable letter of credit/L/C transaction. You both agree to a sale and its exact terms, so you draw up a contract or order form. There may be a number of terms outlined, such as price, number of units, condition of units, shipping date, method of shipping, expected time of arrival/ETA, insurance costs, revocability of the L/C, the banks involved on both sides, partial shipments allowed or full shipment only, dates when the L/C is operational and when it expires. The customer goes to the bank and establishes the L/C. The customer's bank opens an irrevocable L/C naming your company as the recipient after the terms of the contract are honored, i.e., you ship the stuff, the customer gets it. The customer's bank sends the L/C to your bank, which either phones, faxes or emails a message back saying it got it. Your bank then sends to you a copy of the L/C. You look it over, and if you're satisfied, contact your freight forwarder and start delivery. If there is something you don't like, contact the customer to hash it out. Try to set a delivery dates contingent on no acts of God like harsh weather or shipwrecks. If there is a change to the contract, redo it, then go through the process with the banks again. When your distributor confirms the order, a letter of credit is drawn from that company's bank to a branch in the United States or to your bank. This letter of credit confirms that funds are available from the distributor to cover the same costs you quoted. An irrevocable letter of credit assures you the order will not be cancelled at any time. When that letter of credit is likewise confirmed by your bank to deliver the goods, the distributor is assured of delivery. Once the letter of credit is confirmed by the bank, the currency exchange is also confirmed, so you don't have to worry about the fluctuation in currency. Basically, the bank holds the money until all shipping documents are presented. The letter of credit states the terms and conditions to make it legal and negotiable into money, usually holding for proof of shipment of the goods. Your freight forwarder helps you attain all those documents. When you hand them to the banker, the letter of credit is turned into liquid assets for you to then pay the manufacturer and all other invoices from the transaction. Never work on promises. Not only do you take a gigantic risk, but you create bad risks for everyone you are involved with. A letter of credit is the only sure way to transfer these payments. There are many combinations of people and methods that you can use to deliver the goods that were ordered. When you produced a price quotation for the goods, you had to go through all the steps the merchandise will follow. Now, before you proceed, check again. Do you have a confirmed order signed by the authorized representatives of the distributing company? Has your banker approved the letter of credit from the company? Compare the amount of the letter of credit to the amount quoted for the goods. Be sure they match exactly, or, if you chose a certain quantity of several offers, check the prices again and confirm the quantity. Confirm the quotation and sale and do the same with the freight forwarder and any marine insurance agents you are working with, then follow through. In order to assure the quality of merchandise, some manufacturers prefer to handle freight to the loading docks, which makes it easier for you. If you handle overland shipping, follow through to be sure the merchandise is picked up and arrives safely at its destination. Be informed of the date the goods are loaded onto the ship. The factory should have them freighted in time to avoid costly dock storage charges. Since all conditions of the sale must be met to comply with the terms of the letter of credit, you need all the signed documents. Other methods of payment and ways to trade. Cash in advance/CIA. To either pay your supplier or be paid in advance before you ship is the best way to go. It takes trust, which is usually developed over time, plus you need a system of credits for shrinkage and defective merchandise. Cash on delivery/COD. Cash on delivery is an acceptable method of payment for small businesses worldwide. The supplier takes some amount of risk by offering COD terms to newer, smaller businesses, but the only risk is really the headache of lost time and shipping charges, since, if the customer refuses the merchandise or can't pay, it's not lost, it goes back to the supplier. Some freight companies are willing to transport goods via COD whilst others will not. Many carriers will not handle COD shipments because of the hassles involved, the refusals, so in order to make up for this risk and headache, they charge an extra fee for the service. Counter trade. Counter trade is straight barter, kinda like I send you 10 tons of bananas, you send me 3 new Jeeps. Credit financing. Just like there are many ways two parties offer and receive credit when buying and selling stuff, so too can buyers and sellers in world trade come to creative financing deals. Forfeiting. Forfeiting is a method where the bank might pay for the shipment, then treat it as a loan to the buyer, who makes payments with interest. Open account. Just like much of the business between companies in any country is done on an open account, with the goods being delivered, then the buyer having a few months to pay it off, this relationship exists across borders, usually among companies who have been dealing with each for a while and trust each other. Sight draft. A sight draft is similar to a letter of credit. The goods are shipped along with the sight draft and are delivered to the buyer's bank. The bank then checks the shipping documents and verifies that the goods were delivered and the papers are in order. The bank then pays the seller and releases the paperwork to the buyer so that he can clear the goods through customs and claim them. Term draft. A term draft is similar to a sight draft, except that when the bank sees that everything is fine, it releases the paperwork to the buyer so he can get his stuff and wires a term draft to the seller promising payment in X number of days, usually after the buyer gets his stuff, between 14 to 90 days. Export joint venturing. Export joint venturing is a situation where the buyer of goods from a foreign country makes a deal with the seller to offer him some of his product to sell in his country. They become limited business partners. Some export credit agencies. Australia Export Finance and Insurance Corporation, EFIC. EFIC.gov.au. Austria Österreichische Kontrollbank AG, OEKB. OEKB.co.at. Belgium Office National du Toekrooier / National del Crederedienst, ONDD. OND.be. Canada Export Development Corporation, EDC. EDC.ca. Czech Export Bank, CEB. CEB.cz. Czech Rep. Export Guarantees Development Corporation, EGAP. EGAP.cz. Denmark Export Credit Fonden, EKF. EKF.dk. Direction de Relations Économiques Extérieures, Ministère de l'Économie, DRE, Germany. Hermes Kreditversicherungs, AG, Hermes. Hermes-credit.com. Export-Import Bank of India, eximbankindia.com. Export-Import Bank of the United States, Exim Bank. Exim.gov. FIDE Ltd, FIDE. FIDE.fi. Finland Finvera Oy / plc, Finvera. Finvera.com. France Compagnie Française d'Assurance pour l'e-commerce extérieur, COFACE. Coface.com. Coface.fr. Gerling Credit Insurance Group, CGIG. Gerling.com. Greece Export Credit Insurance Organization, ECIO, Hungary Magyar Exportatel Biztosító RT, MEIB. MEIB.hu. Israel Foreign Trade Risks Insurance Co., IFTRIC. IFTRIC.co.il. Israel Discount Bank, discountbank.net. Italy Sicilian Speciali per l'Assicurazione del Credito all'Esportazione, SACE. Izaki.it. Japan Export-Import Insurance Department Ministry of Economy Trade and Industry. metai.go.jp/english/index.html. Japan Bank for International Cooperation, JBIC. jbic.go.jp. Korea Export Insurance Corporation, KEIC. kc.go.kr. Malaysia Export Credit Insurance Berhad, MESIB. mecib.com. Mexico Banco Nacional de Comercio Exterior SNC, Bancomext, bancomext.com. Netherlands Creditverzekering Maatschappij NV, NCM. ncm.nl. New Zealand EXGO, exgo.co.nz. Nippon Export and Investment Insurance, NEXI. nexi.go.jp. Norway The Norwegian Guarantee Institute for Export Credits, GIEK. giek.no. Overseas Private Investment Corporation, OPIC. opic.gov. Secret Área de Estado de Comercio, SEC, Compañía Española de Seguros y Reaseguros de Crédito y Caución S.A., CESC. Creditoecocyan.es. South Africa Credit Guarantee Insurance Corporation of Africa, CGIC. Creditguarantee.co.za. Spain Compañía Española de Seguros de Crédito a la Exportación S.A., CES. CESCI.es. Sweden Export Credit Namden, EKN. EKN.se. Switzerland Export Risk Guarantee, ERG. Swiss-erg.com. The Export-Import Bank of Korea, Korea Exim Bank. koreaexim.go.kr. United Export Credits Guarantee Department Kingdom, ECGD. ecgd.gov.uk.